Hey everyone, Coach Investor back to another video for today. So this is another earnings video. If you missed the past two, PayPal and SoFi, those will be in the top right corner. Now AMD, at the time of making this video, the stock is down around 5 to 6% on super low volume pre-market. Volume. Now you might say, is it a bad quarter? Was the guide bad? What happened there? Well, you will see in this video that the quarter was actually a good quarter. They guided accordingly. As we know, PC market is slowing down. We've seen that with Intel. Yes, sometimes you can compare Intel to AMD, but not all the time, as you will see with data centers. But we've known this for a while, right? And with AMD, with the likes of Nvidia, the data center side is becoming more and more important for the business. So the slowdown in the other segments, while it has an effect, it will have a much smaller one. Now, before we jump into this video, and we're gonna talk about the earnings report, and I'm gonna put some points that they made during the earnings call as well inside the video, so stay tuned for that. But if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor and make sure to check out all the other links in the pinned comment, some of which might actually save you some money. So let's jump straight into this. Revenue grew to $6.6 billion. That's a 70% year-over-year growth. Really tremendous growth. Gross margin GAAP decreased 2 percentage points year-over-year. Non-GAAP increased 6 percentage points year-over-year to 54%. Again, they're growing very fast and their margins are going up, while Intel not growing, margins going down. Yes, again, we know Intel is investing a lot, there are some delays, etc. But unfortunately, AMD's execution now is much better. Now, as for operating income, that increased quite significantly as well on a non-GAAP basis. Basically, again, 100% growth here. Now, GAAP, it is down $0.3 billion year over year, but looking at non-GAAP, it increased $1.1 billion. As for earnings per share, same thing here. GAAP basis, it decreased 31 cents. Non-GAAP, it increased 42 cents. Now, don't forget that they did acquire a company called Xilinx, so that has an effect on that as well, which is why on a GAAP basis, it might look like this, lots of down year over year. And on a non-GAAP basis, well, more upside here. So you have to look on both sides. Now, as for a quick graphical representation of how well the business is doing, this is the revenue trend, has been going up tremendously year over year because execution is key, quality matters, and that's why you see stairs from left to right. Same thing here with gross margin trend, stairs left to right on the way up. Yes, again, these two quarters here, I'm gonna repeat myself, GAAP, non-GAAP. And the same goes for earnings per share. This is GAAP and this is non-GAAP. Now, as for the balance sheet, very strong cash equivalents, and short-term investment close to $6 billion. That's up over $2 billion year over year. Cash from operations reached just over $1 billion, free cash flow of $906 million, and they repurchased $920 million of common stock. Now, as for the various segments. So first of all, data centers. Data centers net revenue grew 83% year over year. Operating income followed that with an increase of 131%. Now, as I said, data centers for AMD, for Nvidia, and even for Intel are going to be extremely important for the future. Obviously, with Intel, we've seen the struggles there. But they did also mention during the call that Epic, well, the data centers, is still on track to grow very well into 2023. With a good cloud visibility. Now, as for client, that increased 25% and operating income increased 26% on that side. So still nice growth there. But as Intel has mentioned and as AMD has mentioned during the call as well, the 2022 PC total addressable market is now seen down mid-teens. And that's why we'll see that Q3 guidance has been, well, guided accordingly. Now, as for the gaming segment, that's up 32% and operating income just up 7%. Now, the gaming GPUs are also under pressure right now. Yes, consoles are still sold out, etc. Maybe later this year there might be more in stock, but usually it peaks, like they said, it peaks in Q3. Remains to be seen what happens there. But they do see some growth ahead in Q4 as RDNA 3 arrives. Now, as for embedded, obviously this includes Xilinx, so net revenue grew over 2,000% and operating income grew over 10,000%, which again, I understand why they put it here in the report because, well, they want to show you every part of the business, but these numbers are extremely, well, I wouldn't say funny, but weird to see in a company like AMD. But with regards to Xilinx, they did mention something during the earnings call with regards to obviously supply chain improvements. So Lisa Su said that since they brought in Xilinx, they have seen they've made some significant improvements in the supply chain. As they look into the second half of the year, they're still a bit constrained in certain areas, certain parts of the Xilinx portfolio, although they continue to make good progress. And so they think that they are able to continue to relieve some of those supply constraints into the second half of the year because of, well, the quality of the design that they have. And they think they can see good growth trajectory for the business. Now, as for the outlook, they do expect revenue to grow 55% year over year to around $6.7 billion. So quarter over quarter, not that much growth. Year over year, still a big jump there. Gross margin stays the same, around 54%. Operating expenses as part of revenue, 24.5%. And then for the full year, they still expect to grow 60% year over year and reach around $26.3 billion in revenue, gross margin to stay at 54%. So as you can see, it was a good quarter, good guidance as well. But there is something I do want to show you, and that's just because you can see tremendous year over year growth in the business, sometimes it makes sense to also look quarter over quarter to see if there is a slowdown happening, and there is one. Let me show you. So on the data center side of things, obviously you can see it increase quarter over quarter. Operating income goes up and up and up as well. You can see the difference between 2020 and 2021, tremendous growth there. Same thing for client overall, 2020 to 2021, great growth on that front. But then comes the quarter over quarter for clients, and that's why we see and we hear everybody talk about a PC market that is slowing down. You can see from Q1 to Q2, barely any growth there quarter over quarter, and operating income has actually decreased. The same thing can be said for gaming. Overall, tremendous growth year over year, right? 2020, 2021, net revenue has grown tremendously. Operating income has grown as well to positive, from negative to positive. But as you can see again, Q1, Q2, slowdown, actually it's down quarter over quarter. Net revenue is down and operating income is down as well. There is a consumer slowdown. Prices of GPUs are dropping as well. Demand for it is dropping overall. So to conclude it all, total net revenue has obviously grown quarter over quarter from 2020 to 2021 has almost doubled. But from Q1 to Q2, you can clearly see, even from Q4 actually, you can clearly see that operating income has come down. So I hope that right now you have the full picture of what actually happened this quarter, what happened between quarter over quarter growth or slowdown and year over year. Maybe that's one other reason why the stock is down close to 6% right now. But again, the stock has gone up close to 30% since its lows back in early July. So maybe the run-up was anticipating much better numbers or much better guide. We don't know, but the overall market has been a bit better. Overall, I think AMD's business is tremendous, world-class management. So for the long term, you should not really be worried. In the short term, the stock can go up, the stock can go down. Doesn't really matter as long as the business and management continues to execute. Obviously, I would like to hear your thoughts down in the comments below. Remember, Nvidia only reports at the end of August. Now, if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.